We have before us here a British pound US dollar 60-minute chart, and just want to map this out for you. Price came down here and made a low, and we see that this up price swing, price retraced down to the 79% retracement, and this is 0, this is 100, and this retracement is 38, 50, 62, 79. Price rallied to 127% extension. It retraced to this level of resistance and tested this level as well as the 10-day moving average. Started its next leg up to the 162% extension and retraced to the previous level of resistance, which is now support. It rallied before encountering an economic event which drove price down. But let's just have a look to see where it drove price down to, taking our last leg up to the high. It drove price down to the 62% retracement level, and resistance becomes support, and now that is providing a base for what is now forming a pennant formation. And we are currently in this pennant formation as price is consolidating, and the consolidation is getting even tighter as the market awaits an economic report. And the market is, I'm just going to expand this a little bit. Actually, no, we can see more if it's tighter. I think so. And we're looking for a breakout of the pennant. Price is currently now breaking out. We see a move to 7,600, the figure, 262% extension of the key reversal leg up, and a bounce at 7,600, the figure. We may watch for it to come back. Let's just watch this level here, or somewhere in and around here, 75, 60, 60 to 80. The reason I say 80 is it could be anywhere along here, from the wick to the body. We see price spike down to 60, and I would anticipate another leg up at this stage. If we just pulled our Fibonacci's on this small swing from where price moved out of the pennant, we see that the 38% retracement is convergent with these highs, these tested highs here. And if price holds at 38% retracement, we should see another nice leg up. Now, you may be asking yourself, this is all nice, I like these technical after the facts as we walk through this scenario. To be honest with you, I'm not exactly sure what happens next. I'm kind of winging it here. But I will say this, that we are going to do a section on trade entries, and you are going to learn how to make optimal entries that will make a critical difference in your trading. But it's going to require an enormous paradigm shift on your part, and a complete shift in your comfort zone as to how you trade, because it will be critical. Now we're targeting 7,600 as the market pauses at 7,600. We spike up to the 162% extension. We blast through 7,700 according to this 60-minute chart. Don't know if we got a bounce at 7,700. or not. We'd have to look on a smaller time frame. Currently at 77.20, a natural support resistance level as well. And now we're looking at we're really looking at possibility of a retracement, maybe another. Let me see, what have we got here in one day? 75.20 to 77.20. Maybe one more attempt up after this economic report. There we are to the 262% extension and about 77.50, and now we begin to retrace. Let's just pull our Fibonacci levels from the low, base of support, to the high here, and the last level of resistance isn't until the 79% retracement. If this leg is going to continue, or if this rally is going to continue, we are looking at 76.80 as a level of support. As we consolidate through the weekend and into Monday. We're still early in the session. This is Asia just opening up now. I wouldn't be surprised if London came back down here and tested. What time is it now? It is 6 a.m. So in the next couple of hours, liquidity should pick up, and we may come back here and test 80 before the next leg up, or we could watch for a failed attempt at a new high and a reversal. Two primary scenarios. It is now 8 a.m. open of London session, and if this level holds, if this level here holds at the open of London, then we are likely to see a real nice leg up. We've got a railroad track, but if price continues to hold up here, we should see a leg up. I like this. This is good, and we need to see price trade and hold above. Now let's just step back for a second. You see this right here? This is the bottom of the range. It's a 38% retracement level, and if you are going to buy, I'm sorry that I moved forward on this, but if you're going to buy, you're going to buy right here on the boldest faced bearish candle that you can find. Right here is where you're going to buy, and we're going to study that in sessions to come. We remain in this consolidation, but price is working to move up. If we don't move up here in the next little while, we could move down. All right. However, I want to note that if you had traded this bold-faced bearish candle on the bounce alone, look, you would have been on the downside, negative dealing spread, no more than eight pips or so, and you could have profited even on the spike up before we even get out of this consolidation. You would have taken first profit, because look, you would have filled at 85 to 90, and it moved beyond 20. That's beyond 30 pips. You would have filled, say if you filled at 90, being generous, because you've got the spread, you still spiked through as high as 77.30. For 40 pips, you had a chance to make 30. Please note this, folks. There we go. There's our move, and our move happens during peak European hours. We start to trade and hold above. So now what do? Well, we take our support and resistance line from either here or here, and we now move it up here, okay, to 77.50, and I'd like to see it get to 7,800 if possible, because at 7,800 you could trade short. But right now what we're doing is we're holding above, and look at the tweezers and the level of support that is being established at 77.50. Previous resistance becomes support. And let's just have a look using our Fibonacci's from the last leg up. It is a 38% retracement and support. You see the rhythms and the rhythm and the manner in which price is consistently moving in this generous uptrend. Let's look at something else here. Let's see what's happening in the trend line scenario. Just make sure that we've have this trend clearly established. We are consolidating, and we still have time left in this session for late New York. We may push up, and Asia may even push it up. 7,800 and a bounce, and a push through 7,800. It's an amazing trend. Now we're moving into Asia's session, and I would say it's unlikely that we're going to achieve. This is what I mean by, let's look at this. Let's spread this out a little bit. You see how we moved up here, and then we start to consolidate into Asia. Now I would say that it's unlikely that Asia will start to make new highs here. It typically does not. At least 70% of the time it does not initiate new highs during its session. Drifting nicely lower, looking at 7,800 could provide support, or these highs right here, but I like 7,800, but we could see it come as far as 77, 80, 85 to 90, but 7,800 would be a target level. It's kind of a natural level. So we go to 40 to 7,800. And let's have a look at where this trend line is going to come into alignment. We stall at 7,800, and right now we're at the Central European session is opening, and London session is now opening, and let's see if they're going to push price even higher. 78.80, 80, 20 and 80, natural levels of support and resistance, and we're looking here now at this level to provide some support right here, 78.40, and we see price spike down. At one time this was a full-on bearish candle, spikes down to the trend line, holds above. That's very, very bullish. You see here how the bulk of the volume is holding above 78.40. That's very, very bullish. And we're making a go at new highs. And let's see if it respects our next natural level of resistance, which is 7,900. And let's see what kind of a bounce we have at 7,900. What's the high here in this candle? Is 97. If you want to trade the shorts against the trend, you want to trade between 94 and 99, and here we have a bounce at 7,900. Let's see how low it goes. It goes as low as 72. So if you traded at 97 or 96, it went down 23 odd pips, so you went almost roughly 20 including spread. Just on the bounce alone, we are forming a doji here at 7,900, and it could go either way at this stage. Looking at a level of support here. Let's look at right around here's our level of support. And we're continuing to move up, and price is slowing, and it will probably ease off into Asia. And as we see price move into Asia, it's unlikely to make new highs above this high right here. And let's check this out further. Price drifting lower now. And just a natural retracement happening here. Let's just have a look and see where we are Fibonacci wise. Tough to say what swing we should pull this from. It's This is getting pretty tight, but here we see the 62% retracement line up with this natural level of support and resistance, and this 78.60 level is kind of a key level right here. We see price breaking through the trend line, and let's see if it offers support here. Interestingly, we get the backside of the trend line converges with 7,900, and we start to see a move through here. This is very bearish now. I think that we're going to see a breakdown in this trend, and let's watch price at this stage to see if we start to move down. 7,800. Look how price respects 7,800. It goes as low as 7,800 even, and let's look to see if there's a bounce here. So we bounce from 7,800 even to 7,840. We have 40 pips here to make 20 to 30. All right, and you have to be confident in your bounces. All right, and there's the 50, and there's the 32. Sorry, the 38. So we see from this low down here, from this takeoff low, we're at a 38% retracement, which is 92. And we also have a convergence level here of the 50% retracement at 05. They're about 10 pips apart, so it's a bit wide. But we're looking at a price is brooding the lows here. What we say brooding the lows, and looking like it's going to break through the 7,800 level now. We have a bounce at the 50. British pound loves that 50% retracement. And let's just speed this up a little bit. Now we have a tweezer testing the lows at 60, the 50% retracement. Oh, another tested lows looks bullish to me. Look how it came up to 7,800, 60 to 7,800, and now we're rallying. Some erratic price action along the way. We're just going to compress this so we can see what's going on. Well, would you looky here? Price rallies. What's it doing? What have you been trained to look for? How are you going to trade this? When price rallies like this, 79.20 natural, and it's testing this key high here, and look at the doji. If price does not move above this level and hold above this level, then we are bearish, folks. We are very bearish. All right. Now, you can wait if you want. You can wait for a retest. This is obviously a closed candle, so during this 1 hour period, I don't know how many times it would have tested this level, and to be honest, I don't recall. I usually do, but I don't. So you can trade this. Best to trade a bold-faced bullish candle into these highs after an intraday 80 to 90 pip run. Very important high. Probably get at least a 20 to 30 pip bounce off it. And if you look here, we bounced from the high of 28 to a low of 86. We saw a very nice 30 pip bounce, okay, 40 pip bounce, and let's see here. The bounce alone should give you some pips. Let's move forward. We're bouncing even lower, and at one time this was a bullish candle, and you don't want to wait much longer than this to make a trade short, and the further it goes, then the further away your stop will be. It's giving you an opportunity. Now let's just say this. Let's say you traded short here. If you trade short here, you will be happy once it moves and trades below 78.80. All right, and you want to see it trading and holding below 78.80. This is not good, okay, but it's a natural small little bounce. We need to start see candles trading below. This is good, okay, and now we see price move down all the way to 7,800. Very, very nice move, and you should study this one. Please study it and come back for more. And there's going to be plenty of this throughout this course.